Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, and I'm joined by my co-host Alex Hinks. But let's bring in our Alex Coffey. Let's bring in our next guest, and that's going to be Landon Swan, the co-founder of LikeFolio.com. Thanks for joining us today, Landon.
Good to be here. Hey, Alex, how you doing?
Good to see you, Landon. Long time no talk.
Yeah, I don't know who that's better for, but let's get into a discussion here about these online gaming companies, Penn Gaming, DraftKings. We've seen both of these stocks slide over 70% from all-time highs that we saw just about 10 or 11 months ago, Landon. And it seems like, is the popularity waning for these stocks, or were they just overvalued to begin with? What's your data at LikeFolio talking about as far as sentiment goes?
That's a good question, because I tell you, the market overall for them is booming. If you look at a recent poll, last year about 5% of Americans said that they bet weekly on sports, and this year it's 12%. So it is over doubled. It's a huge increase. Sports have made a big comeback. NBA especially has made a very big comeback. And so, you know, the market's ripe. You would think that a rising tide would lift all ships. And these companies are doing better. If you look at their revenue numbers, they're fantastic. I mean, DraftKings is plus 60% revenue versus last year. Penn, I think, is plus 34%. They're more diluted than just sports betting. They have a lot of other operations. But everything is making more money. So you're asking, okay, so what's the deal? I think that overvalue has to be the primary argument, and just sort of the sell the news when they do well. But another thing to look at is how well FanDuel is doing. So this is a competitor. Flutter's the parent company, and that we've seen that they are beginning to take market share. They're already a big player in this. When you compare the three, they had a strong position about a year ago, and they've actually increased that position. So when I say position, I'm talking about people talking about which platform they're betting on. And so you can, the movement here is important. If you look at the x-axis, this is the purchase intent. DraftKings growing faster than the other two, and they're all around the same level of happiness, which is not bad. 60% for a betting platform is not bad. But FanDuel is actually doing well overall as far as the size of the market that it's taking over. So a little bit of concern there, but again, happiness about the same. What's interesting about the news or the market in general is DraftKings just locked down New York, just launched in New York, I think 11 days ago. Got a huge boom in purchase intent, not only from that, but also from NFL playoffs starting. Much larger, though, than last year, and Penn lost the bid in New York. So, I don't want to get into a big discussion about free markets, but apparently you can only have so many in each state, and the next battleground is California. That one's huge. Obviously, they both want to try to win that state. So we'll see what happens there. But short term, it looks great for all these companies. All the numbers look good across the board. Revenue, happiness, everything is looking strong, but just a little bit concerned with the stock price. And here you can see that movement. Look at the size of FanDuel. The chart on the left is from a year ago, basically today. And the blue area is FanDuel. And if you look at what's happening here, DraftKings is actually, I misspoke earlier, DraftKings is kind of taking over that, pushing FanDuel out. So really strong movement there. Really like to see that for DraftKings. And that's actually one of the reasons that if you look at the three, DraftKings has the strongest of the three on the earnings score. They're plus 39 right now, whereas Penn is at minus 39. So both sides of the spectrum, both have earnings, I think, in early February. And so we are, if we had to pick one, obviously we'd be bullish on DraftKings, bearish on Penn.
Landon, there's so many moving parts when it comes to this space. We've had this conversation so many times throughout the years on Fast Market. One of them is what you alluded to, which is this kind of deregulation and the normalization of this marketplace. I mean, not during the market hours, not when TD Ameritrade Network is live, but tonight when you're at home and you're watching ESPN, you don't have to look any further than that. The amount of conversation in the public spotlight now around this space is, it used to be taboo, and now it's, almost every comment is around, what's the line, who's favored, what's the over-under, what's the implied score. So things are so much more normalized. It's no longer taboo. It's no longer that you're watching a game and you have the Brent Musburgers kind of making the cheeky comments to allude to it. It's actually out in the open now. I think that's very, very important. one thing you also talked about was kind of FanDuel and DraftKings place in this marketplace. Both of those companies, Landon, started acquiring customers through their daily fantasy sports applications, which have been legal in many jurisdictions longer than the sports betting market has. This is almost as much of an arms race of customer acquisition than it is a deregulation play. When you look at, of course, you want more legalization, you want more states to have these in their jurisdictions, but they got to get these customers in their app, because I'm sure they have tons of data that the average sports bettor isn't going to be shopping lines, isn't going to be going back and forth. They're probably just going to use their one. And when you're in a marketplace, Landon, that you bet on I'm sure you're a Bucks fan now that you're down in Florida, you got to bet 110 to win 100. They know that works over time.
Yeah, absolutely. The average sports bettor is not shopping lines. They're getting on the app that entices them the most, and then they're sticking on that. Now, maybe you'll have some promotion and they'll consider moving, but really, once you get used to something, I think that, they're absolutely used to it. You're right. I did go to the Bucks playoff game. I played the money line just to be safe. It was fun. I actually introduced my son to the concept. He's 10. I said, you got to bet $10 to win 2. He understood what was going on, and they won by like 2 touchdowns, I think. So it was a piece of cake. But yeah, you're right. It's all about customer acquisition. And it's funny because 10 years ago, it was taboo. 15 years ago, they would kind of hint at it on ESPN, and they'd talk about, do you think that this team could win by a touchdown and a half a point? They would say things like that because they couldn't say the line. And now it's just commonplace. Now you got shows where there's the bad beats segment. It's one of the most entertaining segments. So it's absolutely not taboo anymore. It's mainstream. And it was, they were really fighting against the current there. That was going to happen. It's just a matter of time. And now it's just a matter of time before, really, I think most states or all states are going to adopt this, but it's just a one at a time. They go through that battle. But it's funny to see that the whole introduction to players was the daily fantasy sports. And that was kind of a loophole that was built in because fantasy sports had to be legal. And then they said, well, let's push the limits with daily fantasy sports. They did that. And then it's like, well, why don't we just let them bet on the game, because they're basically doing it anyway. And so it's just this inch by inch method where slowly gambling is becoming more and more legalized, sports gambling, that is. And these are the companies that are poised to take advantage. So, hats off to them for doing such a great job of getting out there, making it fun, and putting personalities out there and getting customers in the door. But you're right, it's all about customer acquisition.
Yeah, they're spending a lot on promotion. And hey, Landon, you can move down to Florida. You can become a Florida guy, but do not turn into a Bucks fan, Tom Brady. Please do not do that. But I wanted to hit on the other chart that you had here, and it's based on what I'm looking at. The chart of DraftKings over the last 12 months is just dismal. And you've got that on the lighter shaded here, where you've got intent purchases going up, skyrocketing, and the stock continues just to move lower. It's oversold on a technical level. Implied volatility is elevated at 52-week highs. What's your take here on this, and is this a sign for investors, perhaps?
Well, I love this chart. So you got the gray line or the blue line, that's the stock price. And then you've got the 30-day moving average of people saying either I'm installing the app or I'm betting on it, that kind of thing. And so these are customers saying I'm using this, I'm effectively giving money to the company through revenue. And it's followed pretty well. It's led pretty well. The two lines have followed each other pretty well. And I think the green line is likely leading. And what's interesting right there at the end, you've got NFL playoffs that just started. So there's going to be increased betting around that. But if you go back to the same time last year, there was a spike, but it was nothing like this. I think that New York has a lot to do with this. They just opened up on January 8th. So a lot of people are coming into this. And I think this is very early in this spike, right? We're just a few days into this 30-day moving average spike. But we always talk about divergence plays, and you got a stock trading way down. You got purchase intent that is just starting to spike. So I really like where this is at right now. And this is part of the reason that we've got that plus 39 on the earnings score. And Tom, to your other point, I love the greatest players of all time. That's why Shaq and Brady are two of my favorites. So I'm going to follow them, even if they...
Oh, boy. Go
Landon,
ahead,
one last thing here. I love to pick your and your brother Andy's brain when it comes to kind of the entrepreneurial and like the visionary side of things. And I'm going to do so here with this space because, one thing's for sure, you talked about maybe some of the obstructions of maybe some free market when it comes to the amount of players in the space. But one thing's for sure is there's a lot more players now and a lot more jurisdictions than there were. This has been an area that really hasn't been disrupted for, really since its inception. Do you think as more and more states legalize this, more and more players come into this space, that ultimately the winner is the consumer? Is there going to be a time where these markets get even more efficient and they won't be minus 110, maybe they're minus 105, because that's how you acquire the customer? In the end, isn't this going to be kind of a margin pressure race down to as fine as they can get it in the end?
Yeah, I think it's definitely the consumer's going to win, for sure. Also, the states are going to win. This is going to bring in a ton of tax revenue that they didn't have before. The losers are going to be the illegal operators, the backyard bookies, and the larger guys who've been going around the system. I do think there's going to be pressure, but it's tough because once you get so low, 110 I think is very, very difficult to beat, even though I think it was FanDuel that reported they had a bad NFL season. They lost money. So it is beatable. But you get down to 107, 105, then you're going to pull in some sharps that are going to really take your money. So I think it's just going to come down to who's got the better lines, who's got the better algorithms, and then they're going to focus on getting the customers in, which, money line, I mean, the juice that they charge is going to attract some people, but I think that the sharps are the ones that are really going to be line shopping and really going to be attracted to that 107 more than the backyard guy who's just betting. So I think for the most part, they're going to get away with 110, but definitely the consumer is going to win because you're going to have more people bringing in different styles of game. It's not just going to be, the traditional ones. You can do all kinds of prop bets now. But yeah, you're right. I think that the consumer is going to win. Don't forget the states. They're going to win. And as they see each other start to pull in that tax revenue, they're going to say, hey, I want some of that as well. So I think that the regulation is going to start to avalanche, and people are going to, all the states are going to start jumping on board.
Yeah, and Illinois needs the revenues here, Landon, if you didn't know that already. I think everybody in the country knows that. And you can bet on Aussie rules football, cricket, soccer, which I do a lot of. But, I think that's the lure here, Landon, when you talk about these betting apps, is that once you get hooked and do it, and once these states open up, it's going to open up more opportunities for these companies. But with your data reflective for DraftKings, it's pretty positive, right, moving forward as they open up in more states, right?
Absolutely, yeah. And we're seeing that not only in the just anecdotal or news environment, but we're also seeing it in the LikeFolio data where people are talking about betting on DraftKings at a much higher rate, and the acceleration is incredible. So again, this is, the NFL postseason is a big time for betting, but this is way larger than it was last year. So they've got a good thing going right now. And with earnings reporting, I believe in the I think it's the first week of February, just before Super Bowl, I think that they're going to have some good news to put out about not only the previous quarter, but more importantly, the outlook of the current quarter.
All right, great stuff. As always, Landon, you keep rooting for those Bucks. Hopefully they lose this coming weekend. Appreciate all the information here today, Landon.
All right, thanks a lot, guys.
All right, that's Landon Swan, the co-founder at LikeFolio.com.